What is the outlook for the remainder of this year in your view for gold?
Great to be with you. And the fact that you're covering gold, I suppose, means it's got the attention of mainstream media.
So is that the top? Is this the top then? Is that what this means?
That, if anything, is the most pessimistic thing I've heard about gold in a long time.
Well said.
It took you so long to get me on the air, right? But I mean, obviously we've had a stunning run, right? And obviously we have to keep in mind if something is this volatile on the way up, there's always a risk on the downside correction. That said, if there are two key drivers, I think. One is in the US, we have an easing path at the Fed. And if you take the European Central Bank, for example, as far as the eye can see, rates are going to be steady. So we have a more dovish monetary policy. The other one is the broader debasement trade. And of course, is that correlation or causation is anybody's guess. If that is the case, that may have legs that might last years, so to speak, right? The dollar was always the cleanest shirt. One thing I'd like to mention that maybe not the other guests are not mentioning is when we talk about tariffs, it doesn't just impact the trade, the flow of goods, it impacts financial flows because that's the other side of the goods trade. And so I happen to believe that a wrench has been thrown into the engine that we call the exorbitant privilege, that it's more difficult to use the US to finance things for higher returns abroad. Obviously, this is not a light switch or anything like that, but a side effect is higher borrowing costs in the US, and in the absence of fiscal discipline, it means more pressure on the Fed to lower rates, and we've obviously seen plenty of that. And so that's a dynamic that has a lot of way to play out. And of course, the other context is that valuations are somewhat high. And what do you, in the equity markets more broadly, and what do you do to diversify? Now, I'm not suggesting that gold is very cheap here, but gold historically is one of the things that does well in an easing environment, especially also does well if we were to have a more severe correction in the stock market. And so an increasing number of people have been looking for this sort of diversification.
Well, what's interesting too, as we've seen gold take off, and you talk about throwing a wrench into the U.S.'s exorbitant privilege. I mean, I'm looking at the dollar, or at least the dollar index, Axel, which is down about 10% year to date. Tim and I constantly are asking guests, is the U.S. uninvestable? You know, are the days of the U.S. dollar running supreme over, although so much is still done in dollars? Like, I guess we're just trying to get an idea if this is a tipping point where for the U.S. dollar. Especially, too, with the kind of rise of digital and stable coins, perhaps.
I don't think digital is stable. I mean, the stable coins are US dollar based. I happen to think that's supportive of the dollar, if anything. If you look at the breakdown in the G10, the best performing currency is the Swedish krona versus the dollar. And guess what? The Swedish economy is most, as part of its GDP, exposed to defense spending. And as you may be aware, Europe is ramping up its defense spending. So there are specific things, right? And of course, as a gold person, the debasement trade kind of fits into our narrative. Whether that's really the case it remains to be seen. There is, of course, more competition. Some people say that there is no alternative, and while that may be true, my argument is there does not need to be an alternative. What I foresee is a greater fragmentation. Because if you think, go back to the exorbitant privilege, part of that is it's kind of a machinery that provides liquidity for the world. And if that begins to sputter somehow or is less effective than it has been, less efficient,
right.
It doesn't mean the world coming to an end, but it means that less trade might be happening, more things might be happening locally. Ultimately, that's of course healthy for emerging markets in particular if they finance more things domestically. But we have some structural transformations. And the dollar might be weakening in that process.
Hey, just got about 25 seconds, Axel. So buy gold, buy the commodity, buy the bullion, buy miners, or don't buy any of it at this point?
Well, I do both. I haven't sold any of them. Typically, the gold and gold miner buys are very different. The gold miners tend to be more speculative, especially go to the more juniors. And the physical gold through ETF or otherwise tends to be more of a diversification play. There's a lot that hasn't happened in the junior mining space. Very speculative, but some very interesting opportunities there.